In the value investing world, one of the terms that you may hear on a consistent basis is owner's earnings. This term was popularized by Warren Buffett, and the reason why is because this is the way that he uses to calculate earnings in a way that he believes is a lot more accurate than the traditional earnings calculation of a company. In this video, I'm going to share with you the owner's earnings formula step by step so that you can calculate this number for any company that you like, so you can find good investment opportunities that you can take advantage of. Okay, so let's get straight into the owner's earnings formula. And as you can see right here, we have a graphic that illustrates the ABC part of the formula. So first, the way that the formula works is as follows. In order to take the owner's earnings, you first need to have the information right here. So first, we need the reported earnings. This is the same as the company's net income. Then we need to add the depreciation, the depletion, amortization, and other non-cash charges. The reason why is because these charges such as depreciation and amortization are charges that the business doesn't necessarily have to take out cash in order to pay for them. In other words, these are good to be able to deduct expense from a business, so that way you have to pay less taxes, but it doesn't necessarily mean that the company actually had to take cash out of its bank to be able to pay for these expenses. So that is the reason why you add this number back. And then after that, you need to subtract the average amount of the capital expenditures that you need for the business to maintain its competitive position. This is also known as the maintenance CapEx. So what is the amount that you need to invest into the business to maintain its competitive advantage and its position in the market? So altogether, you take A plus B minus C, and that gives you the owner's earnings, which is an essential metric that investors like Warren Buffett and Charlie Munger use to value companies. So as you can see, the elements of the formula are fairly straightforward. Reported earnings is a metric that is publicly available and you can easily find online, or use a tool like Whitesheets to get the information on your spreadsheet. Same with the depreciation and amortization and some of these non-cash charges. However, the one that's a little bit more tricky that we're going to spend a bit more time on is the maintenance capex. There's different ways to calculate this value, and it also depends on the business that you're analyzing. So this is something that we're going to go into a little bit more detail, but don't worry, because we're going to calculate owner's earnings for different companies using this formula that you can see right here, step by step. Now that you know the owner's earnings formula, it's very important that you know how this formula can be used and how you can calculate the owner's earnings for any company that you want. So in this case, we have it set up for Apple, and I highly recommend that you set up a template like this on Excel or Google Sheets, because the cool thing about this is that you can simply change the company sticker and all of the data will automatically update for you, so that way you can always get the owner's earnings per share and get this number automatically calculated for you. So this template is very helpful, and the cool thing about this is that it integrates both methods of calculating the owner's earnings, and those methods are what we're going to talk about next. So the first method is the Bruce Greenwald method, and this is the one that I recommend that you use, but there's also another method called the all CapEx method. So the cool thing about this is that you can simply change the method that you want to use, and then the template handles the rest. So we're gonna start with this template right here, and we're gonna start with the all CapEx method. So if we go back to the formula, one way that you can simplify this formula is you can take the net income and then add the depreciation, depletion, all this other stuff. So the cool thing about this is that this method, or this number right here, is captured using the operating cash flow of the company. Because if you think about it, and I can pull it up for you, this is the cash flow statement of a company. It takes the net income and adds all the non-cash charges. After that, then you are left with the operating cash flow. So that basically gives you the number that you can see right here on the formula. That basically gives you A plus B. So the key, as I said before, is really the maintenance capex. There's two ways to approach this. The first way is to use the all capex method. This method is very simplistic, and company basically assumes that all of the CapEx that a company spends is absolutely necessary to maintain the company's operating position. So the way that you can see that this is calculated is using this formula. So in this case, for the maintenance CapEx, if that's the method that you want to use, all you need to do is take the operating cash flow of a company and then subtract or add, in this case, depending on whether or not the number is positive, the capital expenditures of that particular company. That's basically going to give you the all CapEx method. So if you look at it from the cash flow perspective, all you're doing is taking the operating cash flow that you can see right here, and then you're adding, which because this is a negative, it's going to be subtracted, the operating cash flow, and that is basically going to give you the free cash flow that the company has. After that, you will be left with the free cash flow, which you can see is the same number. And then from here, you can divide this number by the number of shares outstanding of the company. So that way you can get the owner's earnings per share. So as you can see, that is essentially how the all CapEx is calculated. You can see that it's the same number. And you can see that if you divide it by the number of shares outstanding, that will give you the owners per share on a per share basis. So now onto the other method, which is the Bruce Greenwald method. This is going to give you a different number. So as you can see, the number is slightly different and the calculation is a little bit more nuanced. Okay, so using the Bruce Greenwald method, what you're gonna do is the following. First, what you need is you need these three important items of the financial statements. So you need the revenue, the property, plant and equipment, and the capital expenditure. What you're gonna do is you're going to get these values on a 7-year basis and you're gonna set up a table like this. After this, what this is going to allow you to do is to perform different calculations that are going to allow you to get the maintenance CapEx of a company and the growth CapEx of a company. In the owner's earnings calculation, the most important number that you will get at the end is the maintenance CapEx. So what you're gonna do at the end is you're going to take the operating cash flow and you're going to subtract the maintenance CapEx, which comes from the value G13, which is essentially the value that you can see right here. So now let me walk you step by step through the calculations here. First off, we have the PPE as a percentage of sales. The way that you calculate this is very simple. You take the property, plant and equipment and then divide it by the company's revenue for that particular year. So that gives you these percentages that you can see right here. Then after that, you're going to calculate the sales growth or decrease from the prior year. So the way that you calculate this is you basically just take the difference between the current value, which is in this case 2018, minus 2017, and that gives you the sales growth or decrease. You're gonna do this for all these different values, and then you're going to calculate the most important part, which is the maintenance CapEx. The way that you do this is quite simple. So you take the capital expenditure value for that particular year, and then you subtract this right here, which is essentially the PPE as a percentage of sales times the sales growth or decrease from the prior year. That is going to give you the maintenance CapEx. And then this, you don't need to do this, but this allows you to see the maintenance CapEx as a percentage of the capital expenditures. So this is a cool visualization. And this is the most important number right here, because once you have this, then all you need to do is for the growth CapEx, which is the difference between the maintenance CapEx and the actual capital expenditure, you just take the difference between these two numbers, and that is going to give you the growth CapEx. So this is the CapEx that is used to grow the company. But the one value that we're most concerned with is obviously the maintenance CapEx. Once you have your table set up like this, then that is essentially going to provide you with the owner's earnings that you can use to perform any type of valuation that you want. Altogether, you can change the company ticker, the current year, as well as the method that you want to use to calculate owner's earnings, and you will be able to get this value right here. Something interesting that you can also perform is you can also kind of get like a PE ratio using the owner's earnings. And the way that you do this is you basically get the company's stock price. So in this case, if I wanted to get it, I'm just gonna do it right here. So you're going to use the wise price function, symbols equals Apple, and now we're looking for the price, and this is going to provide us with the actual stock price of the company. So after this, if you wanted to calculate this multiple, all you need to do is take the stock price divided by the owner's earnings per share, and this gives you how many times you are paying the owner's earnings off. So in this case, if you were to buy Apple at the current stock price, you would be paying 23 times the owner's earnings per share. Now you know how to use the owner's earnings formula effectively so that you can calculate this important value for any company that you like. So be sure to put this knowledge to use and make good investment decisions for yourself and those people that you most care about. If you've enjoyed this video, make sure to subscribe and turn on the notification zone so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level. I'll see you in the next one.